Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra, with me Shail Bhatnagar, and this is Market Today, a show where we'll help you understand the closing action on the D Street. Well, it looks better than what we were seeing in the early part of the day. Flattish trade right now on the Nifty 24,462, but it's been very, very volatile. We did had times of complete green tick and positive zones. Small caps and mid caps have also jumped higher, now recovered from the day's low completely. Look at 1.5% uptick can be seen on small caps. That's something that has improved the sentiment for the overall D Street. Mid caps are now up nearly 1% higher in trade, but it's the IT space that's definitely hogging all the limelight right now. The index itself is up by 2.5% right now, and a whole host of top movers which are contributing to these gains. Tech Mahindra and top spot within the top Nifty gain, as you can see, a 2.5% uptick right there. But Coforge is something that we can't take our eyes off. 11.5% higher after those earnings came in. Even in the weak setup in the first hour, it continued to pull up higher, and towards the latter half, now it's now inching higher by 12%. Persistent Systems, the other stellar earnings that came in, 11% higher for this one as well. Emphasis about 5% up. LTTS 4% higher. LTI Mindtree also 1.5% up. The entire space seems to be in the thick of action right now. What else is buzzing on the Nifty? It's the Bajaj twins. We have Bajaj Finance that's up 5.5% as the top mover on the Nifty. Bajaj Finserv up 1.8%. Bajaj Auto also inching higher now, 2.5% higher, and that's how the sentiment has played out up until thus far. Good afternoon, Shail.
Good afternoon, ladies and gentlemen. It's earnings, earnings and earnings. If you for a moment avoid looking at the Nifty and the Bank Nifty on the weekly expiry day of the Bank Nifty, as also T-1 for Nifty, you would imagine that all is well on the world of the Lal Street. And it's the second quarter April, it's the second quarter July-September earnings that have done fantastically well. Look at Zomato. Come festive season, and Sakshi tells me that they've raised the platform fee by 60% to 10 rupees per order, ladies and gentlemen. What was at 242 in the morning is now at 263, up 2.7%. Earnings were fabulous. Profit after tax for the second quarter rose, hold your breath, 400%. And it's no surprise that the counter is the top traded, with 3,700 crores worth of transactions that have happened on the NSE, and well on its way to reclaim former glory. Again, a very strong set of numbers coming in by Persistent, about 5.3 and 5.8 percentage point rise in sales and top line for the second quarter sequentially over Q1, and a very, very strong reward from the market. Ditto Bajaj Finance, a 13% rise in second quarter net profit and a 5.5% uptick. And of course, who can forget the sterling show by Amber Enterprises. Numbers, numbers and numbers. Now, this is the good news that we have. The bad news, ladies and gentlemen, is that no matter how hard the Nifty tries to climb back above 24,500, it's the call writers that are incessantly putting pressure and bringing the index lower. So it's like Trishanku, ऊपर जाने नहीं दे रहे और नीचे वो आना नहीं चाहता. So with that, ladies and gentlemen, let's say hello to our guest, Mr. Sumit Poddar. Mr. Poddar is joining us from Tikona Capital Advisors, where he is the founder and the CIO. Namaste, Sumit ji. Good afternoon to you, and festive greetings ahead of Diwali. How are you analyzing the sentiment on the Lal Street? What looks good and what looks super bad?
Yeah, thanks a lot, Shailendra ji and Sakshi. Thanks a lot for inviting me on this show. And of course, the standard disclosure apply, being SEBI registered RAs as such. So now coming to your question, yes, interesting times, primarily because if you look at 2024, we all have been kind of waiting for a bit of a correction, saying that, oh, ab to ho gaya karke, and things like that. Possibly the period has started, and we are in that kind of a correction situation. All the things that happened during the year, rather it be kind of a soft landing or inflation turning out to be a rate cut situation for all of us, for that matter, or geopolitical situations, as well as even IPOs or SME IPOs, which we have kind of seen through the year. So Diwali se Diwali tak agar देखें तो those are 2024 has been quite exciting so far, and of course the things that were being expected in September are happening in October with FII's money kind of going out. Interestingly, yes, the results are coming out on a mixed venture as such, because some of the sectors were expected to be soft, like for example, banking were expected to be soft. Even the festive season, as far as autos, didn't start on much fanfare as was expected, and even rural spending was soft. Having said that, the data that was coming out was quite strong as far as economy is concerned, and maybe quite recently it has been maybe a cyclical correction that was needed is happening. Having said that, yes, if we look at the structure at which we are sitting in terms of fundamentally, that continues to be on a healthy footing. Uh, but these corrections are a healthy reminder of the situation that is happening, because I guess everybody is taking it for granted that market to chalte hi rahega, amrit kaal hai, earnings आओ नहीं आओ, re-rating होते रहेगा, or things like that. And for that matter, this is a healthy reminder to market participants, healthy reminder to regulators, healthy reminders to even the corporates, because corporates have raised money left, right, and center. They are encashing, they are raising money. So it's a good reminder. Having said that, yes, we what we currently are looking for is things which were kind of
Right.
already in a negative situation and now coming out of a soft patch, and primarily
Absolutely.
because yeah, yeah. So I mean
So, Mr.
sectors like
Poddar,
I
also wanted
yeah,
to interrupt you just to understand from
sure.
you. In case in this recent dip of last 3 weeks, have you added any fresh stocks? Have you, taken positions or advantage of the volatility and bottom fished anywhere?
So, a very interesting question, Sakshi. I mean, given what we believe in story of India, definitely we keep on evaluating stocks and sectors where we find a bit of a value and price gap. Having said that, it's a continuous effort to identify new ideas, new stocks, or new sectors. While this correction definitely provides uh, an opportunity to add. Having said that, recently what we have added is something like a tube investment, which is a holding company of CG Power, as well as it holds stake in Shanti Gears. So it benefits as far as the industrial uh, um, growth that is taking place in the country, as well as the kind of new age investments or new age and manufacturing investments that they are doing. Of course, TD Power is doing investments in semiconductors and things like that, whereas Tube Investments is doing investments on the e three-wheeler side as well as e two-wheeler side. And they aspire to be top two players. I mean, I think that is good enough a reason to have exposure to such company. While they may not have corrected during last 3 weeks, but over last 6 months, given the kind of investments they are doing in the new areas, and the group or the promoter is well known
Hmm.
to back the ideas that are
Right.
for maybe decades and centuries, right? So this is what we have kind of added uh, per se, and we continue to kind of be positive or maybe a bit of a overweight on things like IT. We have already seen during this result there is no incremental negativity as far as IT is concerned, and within IT, of course, a combination of large cap and mid cap. Uh, which is what we believe can really do wonders to portfolio.
Okay. Sumit ji, so you've added tube investments at 4,000, 4,500 rupee levels. Any places within your recommended portfolio, or how should I say, uh, spaces where you have coverage, have you booked profit?
So, I mean, of course, we raised a bit of a cash, but that was a while ago, not necessarily just at the start of this correction. We continue to hold our maybe bets as far as a bit of BFSI, as far as a bit of specialty chemicals is concerned, a bit of even auto ancillaries like batteries or space continues to do well, and we are definitely uh, I mean we are betting on the same ideas rather than really switching a lot unless as we shared ideas like tube investments, which is where we see a healthy upside given the current environment.
Okay, got it. Mr. Poddar, let us understand from here on. You did talk about how from previous Diwali till now things have been very good. Now that we are starting off this Diwali on a slightly, weaker note or a softer note that what have we been used to in this entire year, what is it
Mhm.
that you can share as outlook on the market still next Diwali? Where do you think the outperformance will come in from now in terms of sectors? If one has to build a portfolio till next 1 year, where should one be building up positions in?
So let's just kind of step back and maybe see what are the next things that are likely to happen in the next 12 months. While maybe past 12 months or maybe uh, 12 months and more, what we were grappling with was inflation, high interest rates, geopolitical situation, and to some extent elections and what would happen as far as elections is concerned. Now let's kind of look 12 months down the line. There would be rate cuts. The interest rates would likely to be much lower. We are already rather, I mean, I'm sure we all are seeing that despite expectations of rate cut in US, the rates are rather going up versus an expectation of a rate cut. That is primarily because the US economy is doing well. So they are actually in a catch-22 situation where, of course, growth is coming back. They need lower interest rates, but at the same time, the debt burden is kind of going up. But the typical good situation that is happening for India is despite US rates going up, Indian 10 years have not really gone up to in tandem to the same. So the spread between US yield and Indian 10-year yield is literally one of the lowest since 2003 2006 period. So if next 12 months are likely to be a very tight liquidity situation, I believe that India would be in best situation where such liquidity heat will not be felt, right? So that is one trend. Second trend, as far as the near term is concerned, yes, given SIP domestic money that is there, all of it will get deployed, and once that kind of gets deployed in IPOs or large FPOs that are taking place, we could see stabilization, and this correction is largely because of FII outflows. We could rather see FIS coming back once 2024 and fresh allocations literally start taking place. Third thing is benefit of technology adoption across the world. I mean, why we are seeing US really doing well despite having debt issues, despite having maybe increased unemployment as compared to past, is because of the technology investments that took place in the country. Maybe I mean they have been at the forefront of investment of technology. So next 12 months is what we are going to see. Now,
Yeah.
coming to what is likely to benefit as far as the sectors are concerned. Yes, new age companies like, I mean, this is not a recommendation, but I'm just giving an example of companies like Zomato, PV FinTech, or Car Trade. All these companies which are kind of riding at the forefront of technology would benefit. One trend
Right.
is that. Second trend, of course,
Sumit,
within sectors, we could see, sorry, just to complete this point, within
yeah.
sectors, there could be differentiators like in banks, ICICI Bank, and kind of banks which are at the forefront of adoption. And lastly, but not least, as a defensive play, IT services is something that can do well. Yeah, sorry, Shailendra ji.
No, no, not at all. I was wondering what would be your top pick in the banking space, sir, at this point
So
of time?
banking space on the large cap side, what we actually like is ICICI Bank on a large cap side, given that they are at the forefront of technologization. On the mid cap or maybe a small cap, mass financials is something which we like, which have been a compounder as far as their asset book is concerned. Both the companies are part of our small case portfolios as well as client portfolios, and we definitely, I mean, as a disclosure, we have exposure to both the things, and these are the two which we would bag on to.
Okay. Mass Financial Services, the one which is at 291 rupees.
Right, right.
Okay, okay, okay. What looks good in mass financials for you? Because
So
for the last maybe since October 2019, the stock hasn't done anything at all.
So if we look at, I mean, maybe we need to look at the numbers, and possibly that would give a better feel of what the company is doing. They have been kind of compounding at 20% plus kind of a book. Of course, the near-term issues are what is keeping the asset quality in pressure. Having said that, they have over the cycle been able to manage asset quality quite well as such, and they have raised money recently, which is what is going to help them uh, kind of ponder any kind of cyclical headwinds, if at all, that they may see as such. And I mean, we definitely like the promoters, the way they think. They think in terms of blocks of decades rather than maybe a near-term quarter or so.
Okay.
एक्चुअली सुमित जी एनबीएफसी स्पेस में कोई भी स्टॉक काम नहीं कर रहा. बजाज फाइनेंस तो चल नहीं रहा पिछले 2 साल से. मास फाइनेंशियल क्या चलेगा आपका?
I mean, to both of us, maybe time will tell rather than really debating on this, because they are, see, stock price anyway is a slave of earnings and the way promoters do the business, right? NBFC, as you rightly said, NBFC banks, I'm sure आपकी मेरी किसी की भी recording उठा के देख लो, last 3 साल से every market guru is talking about banking and NBFC being underperforming and things like that. Is it that the business is gone? The answer is no. It will continue to be there. Yes, there were excesses, not just in any specific stock, but on an overall sector perspective. Also, FII's holding were quite high as far as this sector is concerned. So I think market is also learning. We are kind of transitioning not just from BFSI, which is one of the largest exposure as far as our economy, as far as our index is concerned, and that transition is literally taking place, and which is what is being seen as far as underperformance in financials is concerned. I take your point, but having said that, I think we like, or maybe earnings is what we are kind of bagging on, and which is what will lead to re-rating. Maybe you would be right 12 months down the line, or maybe the stock performs, and which is where our clients would be right.
Okay, got it. I think some more earnings coming in. Let's read out some earnings right there. Heritage Foods, remember viewers, this was one of the most talked about stocks when the elections were playing out. And this is Chandrababu Naidu family promoted company. It's reported its numbers for Q2. Consolidated profit has gone up from 22 crores to 49 crores, and this is on a year-on-year basis that we have seen for the company. And of course, apart from this, the revenues have also seen an improvement. When we talk about 978 crore rupees was reported last year same quarter, this time it's gone up to 1020 odd crores. Even though the stock is still down in trade, there has been an improvement at least both top line and bottom line. We will be waiting for some more numbers. Yes, EBITDA has come in, improved operationally to 47 crores to about 83 odd crore rupees now. So those are some of the key parameters that we could read out right now from the flashes. Mr. Poddar, have you tracked Heritage Foods when it was right up there on everybody's radar and everybody wanted to own the stock in their portfolio? And how are you looking at it just 3 months down the line?
I haven't looked at this stock closely, but yes, I mean, on a broader perspective, yes, I mean, these unorganized to organized play are literally playing or maybe doing quite well as far as the numbers and profit growth is concerned. And the re-rating as far as movement within the FMCG space is what really helping them. And as you shared, if the numbers are really good, that would further add to how things are literally happening at this
Right.
company.
Mr. Poddar, what are the other stocks in your small case portfolio apart from ICICI Bank and Mass Financial?
So on the FMCG side, if the discussion is about FMCG, maybe again a snacking company, Bikaji is what we have been holding since last. I mean, we added during last 6 to 8 months. Bikaji is something that we were extremely positive, given the fact that it is more kind of a formalization of what this country eats, what this country likes, unlike a kind of a westernization of food. So yes, to a large extent, Bikaji is a beneficiary of such a trend where again because of their distribution expansion as well as their manufacturing expansion, they are likely to give a healthy growth going forward, which is what is also leading to the kind of growth and re-rating that is taking place. Apart from that, as I shared earlier, auto ancillary what we like
Tube
or rather we
investments.
hold in our portfolios is Amra Raja batteries.
Okay.
Batteries is another space which is literally going through a fantastic transition on the decarbonization side. So players like Amra Raja are likely to be beneficiary of such a trend. They have also made investment and in partnership with global MNC, whereby they would participate in this as such. Uh, Apart from that, yes, we hold a Mastec as well as AFL in our uh, small case portfolio, which has further given healthy returns for the period that we are holding.
Okay. So,
Mastec is another relating story that can really play well even going forward.
let me just recap. Tube investments and Amara Raja batteries from the auto ancillary space,
Mhm.
ICICI Bank and Mass Financial from, let's just say, the financial services space,
Right.
then Mastec, Affle, and Bikaji Foods. So these are the 7 that I remember offhand. What is
Wow. I
this?
mean, you have literally kind of summarized my portfolio. Of course, there are some few more, but yeah, these are the top of ones. I mean, which we like, which have performed well, and which are expected to perform well given the fundamental tailwinds that are in favor of these companies.
Okay. What are the other few more that you haven't named so far? We have
I mean,
7
these are
from you.
well-known large caps. Well-known large caps. I mean,
Okay.
as a combination of State Bank of India or HCL Tech and these kind of companies as such.
Okay. And what has been the CAGR return of your small cap portfolio over the last 2
So,
years?
last 2 years we have been kind of compounding at about 30% plus CAGR as such.
Okay,
So
got it.
last 1 year, and on an absolute basis, we are up by about 70% plus.
Okay, got it. Mr. Podar, would you highlight for us if new age internet companies are on your top list as well? Stocks like Zomato, Paytm, PB Fintech. How have you assessed some of these in the recent 6 months to 8 months odd? Have you added any?
So, I mean, of course, we keep on evaluating stocks as such, and Zomato is something which we had evaluated per se, and a few specific clients had an exposure to that as such. But in our portfolio, majorly we have Apple, which is a beneficiary of the overall digital advertisement space, and that had underperformed in the last 3 years, and uh, when we added, possibly we saw that it has run out as far as the underperformance is concerned, and a good outperformance since our exposure is there as such. And yes, as I discussed, next 12 months are likely to be for the companies of new age, primarily because of a kind of a realization where these companies have started realizing, yes, we have to be much more profitable. The whole idea of capital provider is not just month on month top line growth. It is all about return on capital employed. Of course, first they are looking at attaining profitability, and then that capital efficiency factor would come into picture. So yes, all these companies are expected to kind of do well in the upcoming 12 to maybe more than that as such. And it's not just these three companies. There could be many more which maybe come up, like Swiggy is getting listed. Who knows, with the funding that they get, they are much more aggressive and they get their strategy right to overtake Zomato over a period of time. So yes, these are the companies which are likely to do well. Having said that, these are not recommendations because we have to at identify each of the companies at a specific point in time. So yes, I mean, I would rather say that these are the companies which would be the driver of the markets for the maybe. I mean, I mean, the trend has changed from maybe old banks and old NBFCs, old cement companies or things like that. Things are literally changing to these new age companies, and within each of the sectors, the companies which are adopting technology, adopting new kind of ways of doing things, or aligned to renewable energy, or maybe the EV stuff that is literally happening.
Okay. Sumitji, what are your views on the cement sector? A lot of acquisitions are taking place. Just yesterday, Orient Cement got a new buyer, and before that, Pennar Cement was purchased. Lots of action in the mid-cap cement space. In terms of valuations, what do you think are the top 2 or 3 mid-cap target stocks in the cement space which can be looked at?
So, Shailedraji, let me just, I mean, I'll just share my views as far as the sector is concerned. Having said that, I mean, of course, it being a commodity sector, generally we are away from commodity sectors. We want to be more on companies that are compounders and that are having a good ROC, and there are which are less cyclical. But having said that, we do have a view on this particular sector, or maybe from a fundamental perspective, what is happening is I think the consolidation, any commodity sector ultimately has to go through consolidation in terms of if there has to be a pricing power, there has to be consolidation, which is what is literally we are going through since last 12 months. This acquisition definitely is a good acquisition in terms of the consolidation that is taking place. In terms of the cement demand, yes, that is relatively a bit weak as compared to what was the expectation. Once maybe the infrastructure spends, government spends come back, or maybe normalize back to the levels that were there 12 to 18 months back, we could see volume growth in such companies. Until then, yes, there is this kind of consolidation that is literally taking place. We don't have any recommendations in this particular sector, but yes, what is happening is good for the sector in terms of pricing, volume growth, as well as ultimately to the valuation.
अच्छा, एक
I
बात
hope
बताइए.
Shailendra, I am.
अरे ऑफ कोर्स सर, दिस इज अ मास्टर क्लास दैट्स गोइंग ऑन. अब आप ये बताइए कि हाउ कम देर इज नो फार्मा स्टॉक इन योर स्मॉल केस पोर्टफोलियो? ये बिग केस के लिए तो नहीं है फार्मा स्टॉक?
Sir, I mean, ultimately, for an investor, money is an input and output. Ultimately, what we all are playing is a game, or a probabilistic game where we invest money and get a good outcome of it. While diversification needs to be there, but diversification to an extent where every sector forms part of our portfolio, we would relatively try to avoid such a situation. Yes, given the current scenario, there could be specific pharma opportunities that might come up. More than pharma, we have an exposure to chemical stock. or we had an exposure to chemical stock, which are kind of
Raw
maneuvering
material
more
providers.
towards. Sorry.
They are raw material providers to the pharma space.
Correct, correct. And I mean, yes, I mean, over a period, they are likely to benefit because of this China plus one factor. Yes,
Okay.
they all are going through a good consolidation. But I think a good thing is happening for them because they initially started with huge demand, then they realized, oh, demand is not there. They put up capacity, they borrowed, and now they are seeing China is coming back and trying to kill them. So I think last 12 months,
Sure.
last 12 to 18 months rather, they are now facing the reality of truth of life where everything can go wrong, which you would have assumed as such. But that will train them, and all the managements which come out of this quite clean could really be huge multibaggers.
Okay.
I mean, if you were to again pick any of the stock and see 12 months, array, ye kuch nahi kiya, yeah, maybe 18, 24 months, yes, I would agree to you. But I think जो transition के through this sector is going through, uh, big winners are likely to come out of this sector. And this I'm talking from a 3 to 5 years perspective rather than an
Sure.
immediate 12 months or 24 months. And अभी अग्नि परीक्षा हो रही है वो पूरे सेक्टर के प्रमोटर्स की एक्चुअली.
बिल्कुल.
Okay.
सर अग्नि परीक्षा में तो अब बहुत सारे प्रमोटर फेल भी हो जाएंगे. कल शाम को
बिल्कुल
इंडिया और
बिल्कुल.
चाइना की दोस्ती हो गई. अब आप देखिए, अब वहाँ से दोबारा डंपिंग शुरू हो जाएगी. सारे स्टील स्टॉक्स, सारे केमिकल स्टॉक्स, अब आप देखिए कैसे वहाँ पे आपको सेल्स आते हुए दिखते हैं. चलिए पोद्दार साहब, बहुत बहुत मेहरबानी है आपकी. बड़ा अच्छा रहा पिछला आधा घंटा. बहुत सीखने को मिला आपसे. और जो
Even
आपने
I
सात आठ
enjoyed the.
स्टॉक्स सात आठ स्टॉक्स जो आपने बताया, उन पर हम लोग बिल्कुल ध्यान रखें.
Right. Great. Thank you so much for being part of this, and would like to have such conversation as much time as possible. Great. Thank you so much once again, Sakshi ji and Shailendra ji. Thank you so much.
Thank you.
And sir, festive greetings to you and your customers of the small case portfolio. Here's wishing that in 2024-25, the financial year that will come now, the small case portfolio becomes the big case portfolio.
No, I mean, apart from small case, there are many other clients which we are kind of handling, which are
Okay.
HNIs, and so yes, I mean, we are kind of helping most investors out. And
Sure.
thank you so much for your wishes, and same to the team that is there at Business Today. To all of them, to their families, have a healthy, wealthy, uh, happiness fulfilled next year
जी
and
जी.
many more years for this Amrit Kal that we are going to see
क्या
for
बात.
the next 50, 100 years for India.
Thank you
Thank you.
so much. Thank you. All right, viewers. So that was Mr. Poddar sharing with us his views on the markets and where exactly is he going gung ho on even in this downturn in the markets.